Okay. Okay, so welcome. I think today is going to be another great day. Today is going to be another great day, to get things done. Another great day to get opportunities, great day to maximize whatever life will present to us. So without further ado, let's get in. So looking at this, when we come into the market, the first thing that we have to be conscious of is our market structure. That's the first thing that when we come to the market we are looking for to mark on. So when we get our market structure, we will continue with our supply and demand, and then we will end with liquidity. So multi-time frame market structure is within multi-time frame analysis is within market structure, and we have multi-time frame market structure as well. It is also within market structure, and we have premium and discount pricing. premium and discount pricing, which is within supply and which is within market structure. We have order flow, flip, and structural zones, which are within supply and demand. And we have inducement, sweep, flip, and sweep zones. So now let's start with market structure. With market structure, what you can see from the from the 4 hours, and even with swing structure. First, okay. So after this is the overall view. So what is this? Anchor drawing, anchor. Okay, let me put this one side. After market structure, within market structure, what do we look for? We look for swing structures. We look for internal structures. And we look for fractal so internal, fractal, and structure, swing. And then we will also do strong and weak low and weak structures. So this is what we are going to do with under market structure. And with supply and demand, we will add supply and demand as well. I think within supply and demand, we will add flip zones, and we will add our flip zone, and then we have structural break. Okay, so if you look at this piece of structure just like this, not zooming out, you can see that we have this long bullish move, we have this bullish run here, and then prices support. We are correcting now. We are correcting part of this long bullish move that we've gotten. From the natural perspective of how price is moving, you can see after we had this impulsive move, we had a corrective move, and then price moved impulsive. Then we had a corrective move and price moved impulsive. We had a corrective move and price moved impulsive. Looking at this, we had this impulsive move, we had a corrective structure, and then this side was what? This side was sticking. So we had this impulsive, we had this corrective continuation. Okay, so looking at this one, we can see we can deem here to be a whole impulsive move, and all of this was corrective to facilitate this whole next impulsive move that broke about the structure. Right, so here will be the low, here will be the high. This was swept, or this high was broken. Here became the strong low. We had some kind of pullback, price clearing, and then this strong low was taken. Okay. So from the natural perspective of things, after we have this bullish run, we expect a corrective run. Right, after the corrective run, what are we expecting is we expect the next bullish run. So looking at this, after this impulsive run, we are expecting the next bigger correction run, and then the next continuation. So this is what we are naturally going to expect. This is the framework that we will approach the market with. So from the 4 hour, I think the time frame that I will use is 4 hour, 15 minutes, and the 1 minute. I will use the 4 hour to 15 minutes and the 1 minute. So looking at this structure, you can see we had the same structure. First, I'm getting in. With the market structure, the first thing that I have to identify is my swing structure, my active swing range. What is the current swing range that I'm trading within? Am I trading within a bullish swing structure or a bearish swing structure? What phase are we in right now? Are we in an impulsive phase, or are we trading with the main trend, the main run, or are we trading against the main run? Right. So how these things have to come together so that they will tell a story. All of the time frames, the 15 minutes, the 1 minute, and the 4 hour, all have to have their distinct market structure, their own swing, internal and fractal structures. They will all have to have their own distinct supply and demand with their own. The market is fractal. Whatever we are seeing here, when we go to lower time frame, we are only seeing, we are using this our time frame, this time frame. This is what is the difference. But the candles and their representation and how we interpret them is almost the same on all time frames. But we use the difference in the time frames to analyze the difference in the market. So that swing structure matter. Looking at this, I can be tight or aggressive with my swing structure. So I can see here will be my high. I'll consider maybe this one to be a pullback. This one is a breakout structure. Price switch the bearish, and then still price will continue to break this structure to switch bullish. We switch bullish, we continue the move. We started to pull back, right? And then we broke the structure, we pull back. If I want to be aggressive, I can be aggressive with the structure, or I can be a little bit loose, right, and confirm that, let's say, all of this structure will be a swing structure, and then when price breaks this, you will expect continuation. So after break of this structure, this one was within this range, so you can expect here to be the swing range, and after you get a break of structure, you can trade within here or even here, right? By making or by doing a little bit loose with our structures. So with this, I will identify my swing range. Remember, we are in this bullish run. We have corrective structures. We are expecting the next impulsive run. So it will be nice to keep this thing in mind, right? It will be nice to keep this in mind. Looking at this structure, I'll say here will be the low. So here will be my swing strong, okay, swing strong low, swing strong low. What is swing strong low? Swing strong low, swing strong low. The swing structure, the low of let's say a strong low in the bullish market, a low that's broke a structure and then it go. So here I use SSH to be a strong swing high. So here's a strong swing low, here's a strong swing high. Why is here a strong swing low? Why is here a strong swing low? So the whole philosophy behind almost whatever we do is to be able to take advantage of the bigger players, the others that they are going to put in the market, or the others that they have already put in the market, so that we can ride their waves. Looking at the structure, looking at whatever is happening, we want to choose from the strong structures and target the weak structures. We want to choose from where they are swinging from, not to, right? We don't want to trade through their liquidity or through or against their position. We want to trade with them, right? So when I'm in the bullish structure, since the bullish structure price continues to make higher highs and higher lows, I will expect those highs, to go. The bullish structure highs are weak. I will expect the highs to go because the highs are weak essentially in the bullish one. That's why they are bullish, because they fail to do their job. So looking at this bearish move, you can see that we had this breakup structure. So this one is break of structure. What does break of structure mean? Break of structure means, break of structure. They're breaking the structure. That's typically how it means. It doesn't mean anything extraordinary. It means breaking a structure. Simple. When you break a swing structure with a candle body close, right? When you break a swing structure like this, with a candle body close like this one signals or signifies or confirms a break of structure, right? A real break of structure. But when you get a break through this is not a break of structure. This is just, in liquidity terms, you say this will be a liquidity sweep, right? Price coming to sweep liquidity, and so that we can use it as fuel to move. So we swept liquidity, price formed some kind of correction, or price formed this reaction from tapping into the liquidity zone, and then price broke above this structure. right, into the liquidity pool. Let's look about the structure and continue the move. So with swing structure and internal structures, we expect okay, so anchor means the thing won't move. So then when we anchor this one here, then I'll anchor this one too as well. Anchor. Okay. Okay, nice. So looking at the structure, right? After a break of structure, we expect a pullback. This thing, I've been seeing it after a break of structure. We expect a pullback on that same time frame. If no matter the structure, no matter the time frame, after a break of any structure, we expect a time frame. We expect a pullback on any time frame. So after a break of fractal structure, we expect a fractal pullback. After a break of swing structure, we expect a swing pullback. After a break of internal structure, we expect internal pullback. It is, the reason is, when we have a structure like this, right, where we have this trend line liquidity resting above, with this trend line liquidity resting below, and we having a strong structure, trading pairs to be outside, creating this high and pulling back, where prices start into this kind of demand regions, right? Maybe they are flips, right? They are flips, and price, it signals that it is still. This is a signal or confirmation of BFI involvement, bank and financial institution involvement. So looking at this structure here, right, you could have seen that liquidity was left here, right? You have massive liquidity when price was massive buy side liquidity when price was pulling back, right? We have this. Okay, so this one broke the structure. I think this one also broke the structure. Here was the last low that you were expecting price, to not break. Therefore, here will be a valid demand zone. But this one is when we refine it. I'm not at the moment at demand zone yet, so I will use this to market structure so to continue. When we break any structure, we expect a pullback, but the reason that we expect that pullback is why I'm going back using demand and everything, but I'm not really at demand yet. When we break this kind of structure, like when we get this trend line liquidity here, when price take all of this liquidity, right, when price use all of this buy side liquidity here and we sweep this liquidity, we think that the bigger players use that liquidity resting above here as fuel to resting liquidity. They use it as fuel to facilitate to move into to get in position, right? But in this case, the main move, they don't really go much to the downside. But even there, we pull back After that break of structure, after this break of structure, what happened? Price pulled back. After this break of structure, this is what we are even getting, this higher, bigger pullback. Right? After break of any structure, we expect pullback. After break of any structure, we expect pullback. You can see after break of this internal structure, what happened? Price pulled back. You go this low with a candle body close, price pulled back. You go this low with a strong candle body close, price pulled back. You go this low, price pull back impressively, grab all of this liquidity that is resting above this structure, and then we came to break below the low. Right? When that happened, price came to the lows. You go below the lows, price pull back. So when we tap into these liquidity pools, there's resting on this, so when price tap into this kind of liquidity pool areas, there has to be reaction. There has to be. And that's why anytime we break a structure, we are expecting a pullback, because we assume that a price has tapped into a liquidity zone, very large liquidity or massive liquidity pool, so we are expecting a pullback. Cool. We have this pullback that we are expecting, because from soul structure perspective, this is the pullback that we are expecting. Right? How or when do we expect this pullback to pull back from market structure perspective? Okay, this is I've identified my swing structure. You have factor structures and everything within. But looking at this bullish structure, we can say that we can look back, right, and look for areas within this area where price here, and I don't think okay, so we don't have any valid demand, supply area that you would have expected this pullback from. But cool. Now when price breaks this one, okay, we expect pullback. How do we know the pullback is happening, or how do we even expect this pullback? Looking at this, you expect this when this fractal internal and weak structures, fractal internal and swing come to place, plus the weak and strong structures. So from here you can see the lows were strong, the lows were bullish, so the lows were strong, right? And what happened? The lows started to be weak, the lows started to get broken, all of the lows started to get broken, the high started to hold, even this high that was weak through held, right? Until price broke this structure. So if you watch videos before, means you already have an idea as to what these fractal structures are, what internal structures are, and what today's swing structures are, their job and things. So looking at this, I won't go much deeper, but I can't just do anything like that. I will. So now, when price is pulling back, as I already established, my aim is I expect, or I want to trade with the bigger players, right? I don't want to get myself caught at the wrong side of the market. So when I say this, I want to treat with a bigger player. I don't want to get myself caught up in the market. It doesn't necessarily mean that in bullish, like in this bullish market structure, I should only wait and be buying this move only. Let me use different color. Let's see. Okay. So let's see. Within this, it doesn't necessarily mean that I should only sit on my hands, right, and get involved only in the buy moves, right, here and here. No, I can also get in here, if there's much opportunity to ride this pullback wave that I'm expecting into this demand zone. But I know that the moment or the larger we pull back, the more deeper we pull back into this zone, the higher price will continue. So the deeper price pullback, the higher probability that move will end, or the move is ending. Alright, so when price is pulling back, we will expect where price will pull back to. I think I will go deep into this one at the moment, but I will get back to this. But keep this in mind that I'm expecting price to pull back into this green zone. Okay, why did I draw this? Is it very, very visible? Let me check, see. If we use a background for visualization. Okay, so if let me say, I think this one will be clear. I'm expecting price okay, cool. So the middle line is equilibrium. Here is premium, here is discount. In a bullish move like this, right, when price is pulling back, I expect price to, not always, and price doesn't have to do what I expect it to do, but we play the game according to probability. What is the highest probability price will reverse from premium? Not much, and it doesn't mean price won't reverse from premium ever. Price will, because even looking at here, we won't go much far, we won't go much deep, even from here. So when price broke this structure, Okay, so we have this drop to the downside. Drop to the downside, and price is pulling back. When price is pulling back, you can see price broke the EQ and pulled back into premium before it sold off. When price is in premium, there's a high probability sellers will try to defend the range because it sends sell signal to sellers. Let's drag it to this low. Let's see, here is the structure. Price has broken this and we are expecting the pullback. When price is pulling back, we won't expect price to, from here we can get in the move and look forward to ride the wave to break this low, but it didn't happen. But my point is clear. You selling here and you selling here, there's much difference, and both give you different probabilities. So let's say you are selling here, let's say break of this structure, price key. Okay, let's see, here will be the structure. So we will expect price to pull back. When this one is happening, yes, it doesn't necessarily mean for price to pull back into EQ and even premium, right? Before price will sell off, price will do whatever I want to do. Anything can happen. But most of the times, price will pull back into premium if you're in a bearish market structure. So we can already anticipate or make our moves that, we can already anticipate where there is a higher probability price will pull back into. So looking at this, let's say I have this, I will expect price to at least pull back into EQ or possibly into equilibrium to mitigate some of these orders, because you can see this one has already been mitigated though. I have more orders within here, but to mitigate the extreme. So this is what I would expect. So as we build the structure, what are we expecting? We expect continuation. So we expect pullback. Price build the structure. Price pull back. Right? What are we expecting? We expect pullback into premium. So when price is coming out within the premium, where are the areas where I'll be looking for to take advantage of the move? We have first area here. And I'm not going to go much deeper as to how I have selected these areas. I'm just using this to explain why waiting to trade from the EQ or the premium when you are in a bearish market structure gives you higher probability than selling from discount. So here, let's say you would have missed the move though. But if we would have made the move. But if we refine it to the whole range, we would have gotten the opportunity and we would have gotten this move to the downside to take this liquidity, right? So we sweat to this liquidity. That's not what I'm going to do. So when I'm doing can, it doesn't necessarily mean price have to pull back into premium, but it gives us high probability. So looking at this structure, it doesn't necessarily mean for price to pull back into premium, discount. But when price is in discount, there's a probability, the move can step in, or the move can we can continue the move simply, essentially, whatever. Okay, now we get this demand range here, right? We have a demand range here. What does this demand range do? We expect mitigation from this demand range, right? When price broke above this structure, from the high of the structure to the low of the structure is our demand range. So when we get this initiation out of the range, remember we get range, we get initiation out of the range, we expect price to come into the range for mitigation and for the next continuation to break this impressive move for price to start to form a range or pull back, and then we initiate out of the range again. Looking at this structure, price formed this range. What happened? Price broke above the range, which is the initiation. What are we expecting? We expect price to come back to mitigate the zone, right, and then for price to continue. So this is a combination of market structure and supply and demand. So now we are talking about swing structure, while we are expecting the swing pullback, and now I added premium and discount pricing to anticipate where the likely areas where price is going to pull back to, right? And now we can also use supply and demand. This one is order flow though, but it's part of supply and demand. So we can also use supply and demand to anticipate where areas where we expect mitigation. So when I drag this across, you can see this one is our bullish demand range. When price is within this area, we know that mitigation can happen from anywhere. Mitigation can happen from anywhere. So look at this. We have this low. Okay, so we have this fractal structure here. What happened? We swept this liquidity. It was a double bottom. Sorry. We have this liquidity swept. Liquidity, trendline liquidity in front of it, and this trendline liquidity is also weak resistance or low resistance liquidity, because liquidity hasn't swept, so it hasn't swept any liquidity. So there's a probability this liquidity that is here will be swept, and we will use it as fuel to move the move to the upside. Fine. Now this liquidity has been swept, so it's been used as fuel. So when this happens, I'll draw this on my X on. So how am I identifying this range? You can see that here was a supply range. After price tapped into this structure, what will we expect? We're expecting this move, but it didn't happen, and price, so from the beginning of the reaction to the end of the reaction is where we had this mitigation, right? So where we had this mitigation and price moving to the upside. Cool. We have another unmitigated region here, another unmitigated zone, another unmitigated region. This one is a double top. So there's a probability this one will be used as liquidity, and we will break this low. Cool. Behind everything, we also had this trendline liquidity, which some has been swept though, but not all of them, so I won't use this, but I think I will keep this because it is building tons of buy side liquidity. Okay, now looking at this structure, what am I expecting? We have internal structures and we have fractal structures. With the internal structures, the main aim is to facilitate the movement of the swing structure. So for us to get this swing, move to the outside, we will have internal structures within. So this is what we call internal structures. Right, these are internal structures. These are structures that are moving to facilitate the movement of the swing structure. So if the swing structure is going to move the next impulsive bullish move, the internal structures will form something like this to facilitate this bullish move if you are going to move. Okay, how would I build this? So let me use this. I think we have this last high that led to a break of this internal low and created this or formed this low here. What happened? We swept the liquidity, swept all of this liquidity, and then price continued to the upside, and we swept this liquidity as well. When price swept this liquidity, what happened is, because it didn't close with a candle body, we didn't determine or we didn't deem it to be a weak structure. So we didn't deem it to be a strong structure because it failed to close with a candle body close. With a candle body, it was just a wick, right? So when we get to this kind of thing, it's all going from demand will shift. So if we have a bearish range here, this one is the earliest confirmation that bullish is about to step in. Yes, because we've used this as liquidity. We've swept this liquidity. Price has used that fuel. So institution use, it is even from here you can see the liquidity started from here to move to the outside. So when this happens, we can see that price tied into this, or institution use this liquidity as fuel to enter the market. But I think there wasn't much of liquidity here. That's the reason why it almost caused this slippage, because you can see bonds, a huge wick that swept liquidity came to the lows to break above this one with a candle body close. So the moment we get the candle body close, now this one will confirm a bearish break of structure. This is when we can identify that we've broken a structure, right? So now here will be my strong structure, this one will be my weak structure. It will still hold until price break this with a candle body close. The moment price breaks this, here will be what we call an eyeballs, an internal break of what structure, an internal break of structure. So when we get an eyeballs like this, then I have to step in to the lower time frame, because now here is a strong structure. So here is my strong internal structure. So strong internal structure, and this one is my eyeballs. Eyeballs is a weak internal structure. Your strong internal structure is the 6. Eyeballs is internal break of structure. Alright. When price breaks the structure, I know that here was a whole bearish range, right? A whole bearish a very bearish supply range. Here is a whole bearish supply range, right? So when price initiated out of the range, we were expecting price to come back into the range to mitigate the range for price to continue. It didn't happen. What's happened is now it has switched to bullish from the low to the high, and even within it we have the internal one switching bullish. Internal, this one is internal switching bullish. So bullish order flow. This one is also bullish order flow. So now price, the internal order flow has switched bullish. Internal structure has switched bullish. Now we are expecting, or we want to look for what exactly areas did price really step in. So looking at this, we have this demand stepping in that led to the break of this structure. So when price is coming into this supply region, as I've already explained, we will expect pullback, right? So we will expect mitigation, and from demand range, I think the supply structure is still holding. Okay, so the supply structure has switched to bullish, right? So the supply structure has switched to bullish when price initiated at the range here. So when this happens, the internal order flow has switched bullish. Price has tapped into a demand region from the daily, from the 4 hour in premium, in discounts. We've broken an internal structure. We have a mitigated region here. Within the mitigated region, we have this really unmitigated. Okay, and then I think here is my flow, because within this I would like to identify here to be a flip, though that's this one was swept, but cool. So here will be my flip zone, you can see. Okay, so this one, I think here will be a target zone because we swept liquidity. So if price is coming to the downside, there's a probability will turn around from here. Cool. The moment price breaks this, I'm expecting price to pull back into these kind of areas, right? I'm expecting this pullback for price to tap into these areas for me to continue. Okay, when I go to the 15 minutes, I know that these 15 minutes have to switch bearish to facilitate this pullback that I'm expecting into here, right? But before, where is my fractal structure? You can see all of these candles broke above the candles high. So here is a fractal structure, because all of these candles broke above the candles high, right? So here's our active fractal range that we are trading within. Okay, so active fractal range. So now internal structure has switched bullish. So this one for price to, as far as this one has switched bullish, we expect pullback. Right, we expect pullback because this is the internal structure I'm trading within from this low to the high here. So I expect that price will pull back to facilitate the move. Okay, so the moment price breaks this, here will be my fractal low. Here my fractal low. I think from structural perspective, I will even use here to be my eyeballs. Okay, I will use here to be my eyeballs. Okay, so now what is happening is there's high probability this pullback is ending, and we are going to use all of this liquidity, right? That's here as move or as fuel to this side, because you can see as price is going, price is also building this sell side liquidity, right? So when price, this one internal structure, we are following the internal structure. Okay, so I can get in, I can wait for some few pullback. Okay, now here is my active fractal range. So within this range that I'm trading within, here is my weak structure. Here is my weak structure. Here is my strong structure. I'm expecting price to come to a strong structure for us to continue and break a weak structure. So looking at this, where am I expecting price to pull back to? Can see the same concept. I'm expecting price to pull back into premium, into discount, because we have this whole range as well. We've initiated the range. I'm expecting price to come back to mitigate the zone. So here I can step down to the 15 minutes and expect the 15 minutes internal structure to switch bearish to facilitate that pullback into this zone. Am I going to get involved on the 15 minutes internal structures? I think not. But is it possible that I can create the 15 minutes internal structures? Yes, it is possible that I can play it, but I have to step down to the 1 minute though. So looking at this 15 minute structure, you can see price has switched bullish here. So we have switched bearish here, and then you can use here to be our swing zone. was a sweep flip was there, because why? We had liquidity here, right? We have liquidity here. You can even see okay, now this one didn't sweep liquidity though. And we have liquidity has been swept. The liquidity is sweeping and we are pulling back. Within this, you can see the price tapping into this one. The price pulled back, but price failed. So from the beginning of the reaction to the low of the reaction, right? Because supply was in control, and then price failed to do a job. Now price has broken this low. So from the 15 minutes, here is a structure that we expect price to pull back into and for price to continue. And we can play that 15 minutes pullback before we continue the move. So looking at what I'm seeing, this 15 minutes buy to sell wicks, as you can see, it led to this break of structure. Can also be a move, but from what I'm seeing, I think this one is the highest one where I'm expecting major moves. Okay, when price is in this zone, I can step down to the 1 minute, so you can see this. When price start into this zone, I could have stepped in, and when we get to this break of structure, I can identify here to be the structure, and you can see here is what we call a flip. When price start into this zone, we had a flip. So I can trade against the main 4-hour trend, because I know that I'm expecting 4 hours to at least tap into this major structure before price will continue the move. I can trade with this move because this is a weak structure. Here's a strong structure. Why is this a strong structure? We are a strong structure because it led to a break of this weak structure. Right? It led to a break of this weak structure. Price tapped into this structure here, right, which was a flip, and then boom, price dropped to the downside. So here we can see, now this one has switched bearish. We have facilitated the move to that. We've used this liquidity, right? We've started to sweep liquidity, price pulling back. So looking at this, if I'm looking for it to play the pullback, I think here can be, or here will be the major move. But this one is less probability. This one is less probability, And I expect all of this low. This is a strong low. It led to a break of structure though. So as price start day, that's this way we had this pullback. We have liquidity in front of it. So this one, there's a probability this one will fail. Yeah. So if I'm looking forward to trade here we have probability move than this low. Fine. But I know that price is bearish, and this one can be a move that price can pull back to. If I'm looking for it to play this pullback, see 4.69% is not bad. If I'm looking for it to play the pullback, but you can see this low is still holding because demand. We have this liquidity, as I already pointed out. We have this liquidity here, there's a probability this one will be used here. I think this sell can go. I think this sell move can go, because there's a probability we will use this liquidity as well to facilitate this pullback. So yeah, to facilitate this 15 minutes pullback that I'm expecting, because remember the 15 minutes is bullish. So this one is just a pullback on the 15 minutes, right? To facilitate this 15 minutes pullback into this either buy to sell break, or either we use it as liquidity to move into the main move for continuation. Okay, so this low has been broken. This demand was swept. Nice. The moment this low breaks, here is a failed reaction, because you can see price tap into this structure. When we tap into this structure, what are we expecting? We were expecting, as Rami explained, we were expecting price to continue to break above the structure, to at least here, or to potentially to break above the structure, but it didn't happen. Price started to move and price failed to do its job and returned around. So here will be a flip zone, and this flip zone is area where I'll be looking forward for price to come back into to mitigate. So on the 15 minutes, when I go to the 15 minutes, here will be a flip zone, but on the daily, sorry, on the 1 minute, this one is, you can see, this one is what we call a range, a supply range. So what I'm seeing here is, this one is a break of structure. This one is this IBOS, because this is a 15 minutes, this is the 1 minute 15 minutes fractal low, 15 minutes fractal high, and I know that it is switching the ways to facilitate the 15 minutes internal. So yes, this 15 minutes internal structure, sorry, yeah, this 15 minutes internal structure, so that you can get the next 15 minutes swing move. So we are playing the range, we are playing this, pullback into a 15 minutes main move. Within the 15 minutes main move, we have this flip zone. Within this flip zone, where are we expecting price to turn around from? Where is the area where the main move really stepped in? Looking at this, I can identify here to be the main areas where, the main area where, if price is going to move from, we move from, this one is here, which will be valid though here. But looking at this, I don't expect, it is even out of the, what do you call it, the flip. So price can turn around from here though, but I expect more. But when price comes here, I won't just work on my this one here like I did here. It is supposed to be systematic, the swing, the internal, the fractal have to, the fractal had to switch to meet the move. That's what I did, right? I waited for price to change character here, and price to confirm here to be my flip, and so that I can get in on the move. So when price comes here, I will expect some similar reaction. Okay, now this low, boom, it is swept, but still we can see that price is still within this flip zone. So mitigation can happen from here and move, but I expect here to be, I can do whatever I want to do but here this one will be, how do you call it? It will raise my probability, or is it probability? Now, as price is within this zone, here is where it gets cooler. Let's see, here is the low. All of these candles broke the candles low until we had this. So price broke above this. So we're trading within this fractal range. Price broke above this. Price started to pull back. The price broke above this. So when price breaks above this one, I expect continuation. I expect this low to hold. The moment this low breaks, it is a change of character. It means the fractal structure is continuing. This is a change of character. Demand, we had demand here. It has started. It's failing. This demand led to a break of structure. Right, this demand led to a break of structure, which facilitated the move into this. So when price is coming, I will expect pullback from this demand zone, and I will expect pullback from this another demand zone, or like reaction potentially. We are expecting reaction from this zone. We have, so as price swept liquidity, what's happened? We use it as flow, we use it as pullback, and we pull back massively into this zone. So when price comes here, now the moment we are switching this way, I can make that way across, and then I can actually let me cover this one as well. So when I cover this, then which may issue for the first move target. Now into also, because I still have to keep in mind that price is still bullish, and that bullish move can kick in anytime. Yes, that bullish move can kick in anytime. But this demand range is still holding. This my supply range is still holding. So now let's look at this. We've broken this. Here's a break of structure. And this one has to remind me that I'm trading within this range. Here's the internal structure. Here's the internal structure. The internal structure that I'm trading within. So from this high to this low, price broke this candle with a candle body close, which is a strong bearish, sentiment or signal. What happened? Price is pulling back. So as this one is still holding, the high probability will hold, because we are trading within this range. Price has pulled back into this. Now the fractal structure has switched bearish. So these cells can still hold, So I wasn't tagged in, or I didn't get tagged in. This mitigation now happened like that. So here we have this reaction here. Price hasn't tagged into the zone yet. Okay. But this mitigation has already happened. And then price is pulling back. Looking at this, where are the areas where I'm expecting price to pull back to? Because I still have to keep in mind that there is just a pullback towards this region here, right? Also keeping in mind that we have this buy side liquidity forming, and we can use it as fuel to facilitate the main move I'm expecting. So where are the mitigated regions? Yeah, you can see all of these have been mitigated. Here is an unmitigated region. You can see the supply is starting to fill. Supply is starting to fill. Now when supply fills, here will be a flip zone, but still price is still bearish. But we don't really have a mitigated region here. All of these zones have been mitigated. Right, all of these zones have been mitigated. So let's click right, because the internal structure. So the fractal structure has switched bullish. Okay. So let this candle squeeze below the last candle's low. Here is the field reaction low. Okay, so field reaction. Here is the fractal structure. And that's field to close below the candle's low. I think it is this one. So when price brings this one will be our chain of character, which will signal that this internal pullback is ending, right? Because we have this mainstream trend pullback. We are expecting continuation, which led to a break-off or a failure of demand in any way. But still, this demand zone was mitigated. So okay, so demand, supply, hold, supply held yesterday. We build these sort of structures. Price will pull back. We have flip zones within this. So here's a big structure that I'm trading towards. The big structure that I'm trading towards. Okay, nice. So price mitigated this zone. We sweat. They used me as liquidity. We sweat the zone, and now we are getting in on this. Move. Demand is starting to fill. But when we swing this liquidity, it's the earliest confirmation that because the fractal structure has switched. Now this one has switched to here is the field reaction, because here the last low led to a breakout structure. So here the chain of character, you have the field of reaction in chain of character as well. So when price is pulling back, we are still bullish. So we are still bearish on the 15 minutes and the 1 minute. We are still looking to sell. But we have to keep in mind that this one is just a pullback on the 15 minutes. And the 15 minutes is bullish, which aligns okay, cool. Now the moment we get a break of structure like this, we know that we can't get in on this move, because although this one can be the main move that we are expecting, we still have to keep in mind that this one is switching bearish or switching bullish to facilitate this internal, this pullback to continue. But if this one brings about this, then this one will be the signal, the real signal that the main move in Ankasa is happening. Because if it breaks out, then here will be a valid flip zone where I will expect major moves to take away from. So let's see. Okay, nice. Demand is broken. Supply is broken. Let me go back. The internal the swing structure in the 15 minute, the 1 minute has been broken, which means the 1 minute has switched bullish. The 1 minute internal structure has switched bullish. Now the 1 minute has aligned with 15 minutes. Now the 15 minutes was bullish, the 1 minute has switched bullish, which is I think it is turning around from here. Okay, so now price is turning around from this zone. If that is the case, we start into this. As price start into this, here is a flip zone. I will expect price to come back to mitigate. Okay, nice. We have multiple sweeps of liquidity. We have another liquidity being swept here. So if okay, nice. Now we've tied into the zone. Let me jump to the 1 minute. Let me go down to the 1 minute. Okay, now here was the real that I'm trading within, right? It switched bullish. So this one is just a pullback to facilitate this move into here. You can use this to see this are premium and discounts. You can see we're expecting pullback into this kind of structure. Pullback is here. We learn to look over this structure. So I think here is an area where if I'm looking for it too long, I can learn from here, or I can wait for price to tap into this to change, for 1 minute to also switch bullish. Because 1 minute has switched bullish, the internal 1 minute has switched the 1 minute fractal structure has switched bullish. Now let's see, here will be, we have this block of structure here. So here will be my 1 minute internal high. Okay, this liquidity, this one has been swept. This one as well. So the sell has been, the 1 minute sell is still holding, right? The 1 minute sell is still holding. But let's look at how this ring will hold. If this ring breaks, cool. Okay, now the ring is broken. So it means the move that we are seeing, that we were expecting, is still in place, because we were expecting this 15 minutes pullback into premium. So this is a typical example of what I started explaining at the beginning of the lesson. It doesn't mean we can't, buy from premium when price is bullish. We can buy from premium, but it provides lower probability, because when price is in premium, there's ton of sell pressure, and there's high probability price will pull back into this zone before we will continue the main move, or at least into EQ. And looking at this, you can see that this buy to sell wicks is within the EQ. So when price tap into this, I'll play this one on the 1 minute. Okay, so this one price didn't tap into the EQ low, but okay, price didn't tap into the EQ, but we've switched bullish. Yeah, price didn't tap into the EQ, and we've switched bullish. We have liquidity that was swept. This structure swept liquidity. We had one, demand region here, a valid supply region in which we were expecting massive sell-off. When price came into the zone, multiple reactions, all of them which failed, but I will use the recent one because here is also a failed reaction. So from this failed reaction, we have from here to the low will be our flip, but we know that mitigation can happen from any of these zones, which is also our supply range, right? Mitigation can happen from any of these zones, but we will expect much of the mitigation to really move away, from here. So this is the 1 minute. We can get in long straight away, or we can wait for price to come into the zone, and we will expect changes of structures, for us to continue the move. So we can see this is a bit of this is a great example. Price came into the range, the supply range, the demand range that we were looking for to trade from. We didn't get the move, and we had this mitigation. So we had this failed reaction, and we had a break of structure. Now, can this be an inducing buyers into the move early? So yes, because we have this sell side liquidity which led to a break of structure. So in a way, it is a valid demand region though, because it led to the break of the structure, but it is not a swing structure. We can consider here to be a swing structure, a 15 minutes or 1 minute swing structure, when we had some kind of valid pullbacks. So within this one can be an internal structure. So here, what I can also see is this one we haven't mitigated any liquidity here. So it means this one is a low resistance liquidity area. So there's a probability we will use this as you sweep this and you use it as liquidity to tap into the main move at the lows. As price has started into this, if price breaks above this, cool, then this one is a valid structure. But if price fails to break this and price breaks below this, then we will use this as liquidity, and when price taps into here, this one will be some kind of a valid move. But if price breaks this, I will adjust my move. Because you can see price tapped into this, we broke above this. We have this liquidity still sitting here, and we know that there's a time will come they will use it. So now I'm in the main move. Right, I'm in the main move. Is here a flip zone? Yes, we had supply range here, or even when I extend this, we have the supply range here. We were expecting a break of structure. This supply range led to a flip. So here is an area where if price is going to pull back to, I'm available to take advantage of the move. But we still have to keep in mind that these zones, we have this also unmitigated area, unmitigated supply. So if price is coming now, the candle that failed to close This candle failed to close above the candle's high, so I'm trading within this high and this low. If this one breaks, cool. If this one do not breaks, okay. So now the fractal structure, this one has broken, right? So I think this one will be my fractal structure. Fractal structure is still holding. Okay, now price has come back to this unmitigated area. We switch bearish, but we know that we are switching bearish to facilitate this pullback into this zone. Price can continue the move, but as price is in this area, I will expect change of characters and I will expect supply regions to fail, because we have these supply regions here that led to a break of structures. So looking at this, still we are expecting this main move, right? But we are also following price. We don't predict, we react. So looking at this, where is the last candle that I'm expecting this big of structure? Because all of these candles break below the candles low. All of these candles break below the candles low. So I think I'm trading within the highs and the low here. If I'm looking forward to stepping right away, I will be tagged in like this. If I'm not, I will wait for change of character, a clear change of character, so that I will expect this low to go. And then price will change character. Then that one will be half bubble, right? So that one will be half bubble. Okay, so now this low is broken. The moment this low breaks, then we have to adjust our change of character. Okay, this one closed below this. This candle failed to close below this candle, right? This candle failed to close. I think it failed to close below. Now this one is also this one has been swept. Alright, the demand has started to fail, and then price is continuing the move. Now the moment price breaks this, I'm not naive. I'm still keeping in mind that the bearish is still holding. The bearish move is still holding, and there's a high ability, this zone and liquidity that we were expecting will be used, right? We will use, and price will pull back deeply from here before we will continue the move. We don't know, but we expect that there has to be mitigation, or we have to have that change of character for us to know that the main move is starting. Okay, so we've broken all of these candles. Okay, so we have this fractal. So great, this sell side is holding. You can see now liquidity is being used. If I extend this, let's see how price will react from this zone. Okay, now liquidity is being swept, or we swept liquidity. When price starts into the zone, we will expect massive reaction. I can get in again, switch away, or wait for change of characters, because you can see this one will be our last change of character level.
Okay, so if we were expecting this pullback, we would have gotten this move, or we would have waited for price to break this structure, right? And when price break this, right, we will expect this, initiation of the range for price to pull back. When price is pulling back, we will identify these two areas. This one area, and we identify this another area as well. Okay, so this one, even this one was swept, right? This liquidity was swept. We have these demand regions here. I think here will be the field reaction, the flip zone. We have multiple demand regions here, but let's ignore this. You get the point. When price comes into this demand region, we are expecting this low resistance liquidity. We will expect this buy side liquidity to be used for price to continue. So now supply has started to fill. Here we have this fill reaction here. So from the beginning of the reaction to the low of the reaction, we will expect, if we use this range buy to sell range, we know that here is a fill zone. So this one has filled, but this will be a flip. We broke a structure, we change characters and things. So now the price has started into the zone. When this happens, I will expect the main. Remember, we are still within the premium structure, and bearish can still take hold of the move. I'm still anticipating that bullish move, because this is what price is saying, although we are not in the premium structure. Okay, cool. So I'm just waiting for this pullback. Okay, it's what has taken me this whole time. Wow. Okay, so now the main price is within this kind of range. This is where I will expect the main move. Yeah, this is where I will expect this kind of moves. And even if price is within this here, this one will be golden. But you can see, yes, we swept to the liquidity zone. We swept this liquidity. The price is moving to the upside. Nice. But yeah, you get the point. So yeah, this is what we do. I think here's my strong swing structure. The swing structure high. This one is a swing strong low. These kind of things. Now I'm expecting to trade towards. Right, I'm expecting price to trade towards this. So let's play price and see. And I'm expecting this one to be used as liquidity. After here, see recall structure. So we expect this pullback into discount and premium discount and for price to continue. When we break this, we will expect pullback into premium, into discount, and for price to continue. That's the framework that we will keep on keeping on until it changes, right? Until it changes or switch. So this is what we will be doing. So now you can see that price has tapped into my major area. We use this as inducement, right? We use all of those as inducement, and I'm expecting this to be a trend line liquidity. Price to use them as fuel to move to the upside if we are going to move to the upside. So we can see what is happening. Price use this, we swept liquidity, and now all of this liquidity has been swept to the downside. But you can see the framework is there. So just this pullback is what took me about 2 hours. Cool. I'll stop here. But here is also a flip zone. So let's say if you are looking forward to play this move, you can expect reversal from this kind of structure because it's a flip. But you can see that it will act as, or it can act as, pullback zones to facilitate that pullback into this main move for continuation. Right, so all of this is used as liquidity. You use them, so there's high probability you close, you at least pull back into this flip zone before. So we missed. Okay, now price has started into the flip zone. But I have this extreme, unmitigated extreme. Unmitigated extreme. We will expect this. So now on the 4 hour, when we break this, it has switched bearish. 4 hour has switched bearish. So if that is the case, swing structure is bearish, then the internal structure has to switch bullish to facilitate the swing structure. That's why we got this move. So this is what we've gotten now. Cool. This is what we've seen now. So we know that this one was switching bearish to facilitate the pullback. And now as price has moved into the flip, there's a high probability, we will have this mitigation into the main move before we can get before the main continuation will happen. Anything can happen though, but this is what we are expecting. So I will end here and I will get my sleep a little. We will continue tomorrow.